Good morning and welcome to today's class. That is the auditing and assurance. Auditing and assurance. So I will first highlight the topic that we'll be able to go through. Then we'll be able to begin with the very first topic, which is the assurance and non-assurance engagements. Begin with the assurance and non-assurance engagements. So the topics that we're going to cover, these are the topics that we'll be able to cover. This is assurance and the assurance and auditing and assurance units, the topics that we'll be able to cover. Begin with the topic number 1, the assurance and the non-assurance engagements. Non-assurance engagements. Now, on assurance, this is the backbone of what we call the auditing. When you are doing auditing, you are providing what we call an assurance. And basically, on assurance is where a practitioner is engaged to review a given subject matter against a suitable criteria to give a level of assurance. It's just like the way we do auditing. When I talk of subject matter, I'm talking about the financial statement, where an auditor in this case is evaluating, or he reviews the financial statement to give a level of assurance, or to give their opinion in this case. That is what in this case we'll be able to talk about, the backbone of where auditing comes in. So that now we get to the part of the auditing. Number 2, I will talk of the nature and classification of audits. Now be able to know what we mean when we talk of audit and how we classify audits. Number 3, we'll talk about the auditor's legal framework. Auditor's legal framework. Generally, here is how an auditor is appointed, how an auditor can be able to vacate from the office, and how the auditor is legally liable. Number 4, we'll talk about the auditor's provisional framework. Auditor's provisional framework. When we talk of auditor's provisional framework, generally is how audit provision is regulated. And in our concern here, we'll just be talking about what we call the Code of Ethics, where we say the Code of Ethics is in 2 forms. There is what we call the fundamental principles, and we'll talk of the other provisional guidelines. What, in this case, how or what the audit provision is normally guided in that order. We'll also talk about the auditor's engagements. The audit engagements. Audit engagements. Now, on audit engagement, this is where the audit process begins. An audit is a process. When I talk of a process, there is where it has to start and there is where it has to end. So for you to understand basically the auditing, we need to know what is the audit cycle, because after audit engagement, what we'll be talking about is as per the audit cycle. So you need to know, like, for example, we normally begin with agreeing with the terms of engagements. What do we talk about there, or what happens under the agreeing with the terms of engagement? After that, we'll talk about the gathering background knowledge. We'll talk about the planning. We'll talk about the systems, where you are ascertaining and evaluating systems. We'll also be talking about what we call the gathering audit evidence, which is just on audit evidence, review of financial statements, audit finalization, and then what we call the audit reporting. So out of the audit engagement, we'll be able to know what is an audit cycle. And then we'll now be able to know from there, what is it that is supposed to be done in each and every stage of auditing. That is under what we call in the audit engagement. Number 6, We'll also talk about what we call the audit planning. Audit planning. After we talk about the audit planning, I will talk about the audit documentation. Audit documentation. After that, number 8, we talk about the audit quality control. Audit quality control. Number 9, I will talk about what we call the internal control systems. Internal control systems. We'll also talk about number 10, errors, frauds, and irregularities. Frauds and irregularities. Errors, frauds, and irregularities. Number 11, forensic accounting. Forensic accounting. Forensic accounting. Number 12, we'll talk about the audit evidence. Audit evidence. Number 13, audit of elements of financial statements. Elements of financial statements. Number 14, we'll also be able to talk about the audit finalization. Audit finalization. Number 15, we'll be able to talk about what we call the audit reports. Audit reports. And number 16, the last one is auditing under computerized environment. Auditing under computerized environment. Auditing under computerized environment. Auditing under computerized environment. So those are mainly the topics that we'll be able to cover under that unit. And I'm going to be a little bit fast, but just in case I'm more faster, you can let me know. I want to make sure that before the end of the 2 months, we have already covered everything. And as I also do the topics, we'll be going through the questions, you know how in this case, the question may be asked. So I want to just begin with the first topic, yeah, which is assurance and non-assurance engagements. Assurance and non-assurance engagements. Assurance and non-assurance engagements. Assurance and non-assurance engagements. So here we're going to talk about 2 parts here. First part is on what we call the assurance engagement, and then we'll be able to talk about what we call the non-assurance engagements. When I talk of non-assurance engagements, we are talking about what we call special audit related issues. The special audit related issues. What we mean is generally you are not doing an audit, but in this case, you are not doing the audit as a legal requirement, but it can be done. We'll just be able to see on that case. So I will begin with this part of what we call the assurance engagement. I'll begin with this part we call the assurance what? Assurance engagement. Now, what do we mean when we talk about an assurance engagement? Now, assurance engagement is where a practitioner is engaged to review a given subject matter against a given criteria to give a level of assurance. Let me just write here, is where a practitioner is engaged. Practitioner is engaged to review a Given subject matter, which was a responsibility of another party, another party, to give a level of assurance or against suitable criteria, suitable criteria to give a level of assurance. 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 Now, I want to just underline the practitioner, the subject matter, and what we call the suitable criteria. Now, when we talk about the assurance, an auditing is an assurance engagement. And I want to relate it with what we call the auditing here. Now, when I talk of a practitioner, we are talking about the auditor. An auditor is a gauge. Is a gauge to review a given subject matter. The subject matter here is the financial statement. The financial statement is what is a responsibility of another party we call the accountant. So the auditor is reviewing the financial statement against suitable criteria. We audit financial statement to see whether they have been prepared in accordance with what? Identified financial reporting framework. When I talk of identified financial reporting framework, is the benchmark against which the financial statements are measured or evaluated against, so that you give a level of assurance. In auditing level of assurance, we are giving an opinion. So that is what in this case we mean when we talk about the assurance engagement. Now, elements of assurance engagement. Elements of assurance engagement. Now, this is one of the questions that is highly examined. You look at December 2024, I think it was there. When you check on the past paper, on December, this should be December 2024, may open that. On December 2024, December 2024, December 2024, December 2024. On December 2024, should be question number December 2024. Let me see whether it's the case. December, not December, but not in December, but in April 2024. Now, it was on April 2024. This was question number 1B. Question 1B, where you are to talk about the 5 elements of assurance engagement. The 5 elements of assurance engagement. Now, the element of assurance engagement number 1, there is what we call a 3-party relationship. When you talk about the 3 parties of the 3-party relationship here, we are talking about 3 parties in here in assurance engagement. There is what we call a practitioner here, who is now the auditor in auditing. We are talking about what we call the responsible party. Responsible party here, we are talking about the accountant, who is the one who prepares the financial statement, or generally the management. Accountant, or you can talk about the accountant. Then we have the third party is now what we call the intended user. The intended user. This is generally the users of audited financial statements. The users of audited financial statement can be the shareholders, can be the customers, can be the general public, can be the government. That is the intended users. And this is where three-party relationship comes in. The second element is what we call in the subject matter. Subject matter. When we talk of subject matter, it is what is being measured or evaluated. Measured or evaluated. What is being measured or evaluated? So in audit of financial statement, the subject matter is just a financial statement. Audit of financial statement. Financial statement. The subject matter is a financial statement. Subject matter is the financial statement. That is the second element. Number three, we talk about what we call the suitable criteria. Suitable criteria. When we talk of suitable criteria, we are talking about the standard or the benchmark against which the subject matter is being measured against. The standard or the benchmark against which or with the benchmark to which the subject matter is measured against, which the subject matter is measured against. The suitable criteria. We know in this case, in audit of financial statement, the subject matter, audit of financial statement here, the subject matter, the suitable criteria, the suitable criteria is the identified financial reporting framework. So as we measure the financial statement, we want to know whether they have been prepared in accordance with the identified financial reporting framework. That is the suitable criteria. Number four, we talk about, and before that, there are what we call the characteristics of a suitable criteria. Characteristics of a suitable criteria. Characteristics of a suitable criteria. This was in a sitting of May 2018 question 1A, 5A, where you are to talk about the characteristics of a suitable criteria. Now, when you look at the question, May 2018 question number 5A, this is how the question was framed on May 2018 question 5A. You are given that a suitable criteria is a benchmark used to evaluate a subject matter for purposes of presentation and disclosure. You are required to describe three characteristics of a suitable criteria. Three characteristics of a suitable criteria. Now, what are the characteristics of a suitable criteria? Number one, And when I talk of suitable criteria, generally, we are talking about the characteristics of identified financial reporting what? Identified financial reporting standard. Identified financial reporting framework. So number one is what we call the relevance. Now, the criteria should be relevant such that it assists, should be relevant to the subject matter such that it assists in decision making to the intended what? To the intended users. So you can write that it should be relevant, relevant to the subject matter, such that it assists in decision making. This is to the intended users. To the intended users. Remember the purpose, the intended users here. They use the audited financial statement to make decisions. Like for example, they may want to, if they want to invest on the company's shares, what will be the basis of them making such a decision? Will be the audit of financial statement. The other one is completeness. Completeness. The criteria here should not omit any aspect that may be necessary in decision making. Not omit any aspect that may be necessary in decision making. Therefore, it must be complete. It must be complete. Number three in this case is on what we call the reliability. It also must be reliable. Now, what we mean when we talk about the reliability in our case here? We mean that it should be a consistent measurement, or it should be able to evaluate the underlying subject matter under all similar circumstances, and this is by different practitioners or different auditors. So it should have consistent measurement and evaluation, of subject matter in all similar circumstances. Subject matter in all similar circumstances by different practitioners. When I talk of different practitioners, we are talking about by different auditors. Number four, we also talk about the accessibility or neutrality. When we talk of neutrality, the criteria should be free from bias. Biases or errors. Be free from biases or errors. And number five, you can also talk of understandability. It should be well understood by the users. Be well understood. Well understood. This is by the users. By the users. It should be well understood by the users. And number 6, can also talk about the accessibility. Easily accessible to the users. Again, should be accessibility. It should be easily accessible to the users or by the intended users. So if you ask about the characteristics of a suitable criteria, or the examiner may use the characteristics of identified financial reporting framework. Generally, we are talking about that. We are talking about the characteristics of a suitable criteria. The characteristics of a suitable criteria. So that is on the element number 2, what we call in the suitable criteria. We can also go to element number 3. We are talking about the evidence process. The evidence process. This is number 4. The evidence process. Now, when we talk about evidence here, we are talking about the audit evidence. And generally, we are talking about the facts and information that the practitioner gathers as a basis of forming his conclusion, or basically as a basis of forming his own level of assurance. These are refers to facts and the information. Facts and information that practitioner gathers. To form, or as a basis is as a basis of this conclusion. So this is the evidence now. Which in our auditing, we say that the audit evidence should be sufficient, appropriate audit evidence. Sufficient, appropriate audit evidence. When I talk of sufficient, we are talking about the quantity, what the auditor considers to be enough. When I talk about the appropriate, we are talking about the reliability. From which source? And that is what we'll be talking about in audit evidence. Number 5, the last one, is what we call the opinion in written assurance report. Opinion in written assurance report. Written assurance report. Now, when I talk about this is opinion, this is the practitioner's conclusion. Practitioner's conclusions on whether the subject matter conforms with the suitable criteria. Conforms. This is with the suitable criteria. Conforms with the suitable criteria. Whether the subject matter conforms with the suitable criteria, or generally, whether the financial statements have been prepared in accordance with what? The identified financial reporting framework. Now, this is generally on what we call the audit opinions. So an auditor can express 2 types of opinion. There is what we call the unqualified opinion, or what we call the unmodified. And there is also what we call the qualified or modified audit opinion. or what we call the modified. Now, when we talk about the unqualified audit opinion, this is a favorable opinion. What the auditor means is that the financial statements conform with the identified financial reporting framework. So what we mean is that the auditor has no reservations on the financial statements. But now when we talk about the qualified or the modified opinion, is where the auditor is having reservations on financial statements. Generally, what the auditor here means is that the financial statement do not conform with the suitable criteria. Now, in modified opinion, the auditor can express full opinion in such order. There is what we call the possible adjustment. There is what we call the qualified opinion. There is except for and what we call the disclaimer opinion. We'll just be able to talk about them as I'll be talking about what we call the audit report, where we'll just be able to know what are the basis of modification on such audits. Kama tunapeana disclaimer, what are the bases that the auditor used to give a disclaimer? If you are giving an adverse opinion, what are the bases that the auditor in this case will use to give such an opinion? So that is on what we call the elements of assurance engagement. Now let's talk about what we call the classifications of assurance. Classification of assurance engagements. Classifications of assurance engagements. Classifications of assurance engagements. Now, on the classifications of assurance engagement, majorly, audit is, assurance engagements are classified into two. We classify them as per the level of assurance, and number two is as per the structure of engagement. As per the level of assurance is where we have what we call the reasonable and limited assurance. When we talk about the structure of engagement, is where we talk about what we call the attestation engagement or what we call the direct reporting engagement. So I can just have that. It's classified. One as per structure of engagement, as per level of assurance. As per the level of assurance, here is where we talk about the reasonable assurance. Reasonable assurance. And now number two is let me call A and B, what we call the limited assurance. Reasonable assurance, and number two is what we call the limited assurance. Number two is as per structure of engagement. Structure of engagement. As per the structure of engagement here, this is where I talk of C, the attestation engagement. Then there is number D, what we call the direct reporting engagement. Direct reporting engagement. Direct reporting engagement. Now, this is one of the questions that was set in May 2016 question 2B. May 2016 question 2B, and also November 2016 question 5A. November 2016 question 5A. On November 2016 5A, you are to talk about the types of assurance engagement. The types of assurance engagement. So we can talk of the first one here. Talk of the first one. So if you are told to talk about the types of assurance engagement, the reasonable, limited, attestation, and direct what? Reporting engagement. So we can begin with this one, the reasonable assurance engagement. Reasonable assurance engagement. Reasonable assurance engagement. Reasonable assurance engagement. Now, here we talk of it as an assurance engagement, which the objective is a reduction of assurance engagement risks to exceptionally low level in circumstances. And this is to give a positive or as a basis of a positive form of an expression of an opinion. Now, when I talk of reduction of assurance engagement, generally we are talking about the chance that the practitioner may issue inappropriate opinion when the subject matter is materially misstated. In most of the cases, it just simply what we call the audit risk. So for the assurance, the reasonable assurance engagement here, you are reducing the assurance engagement risk to exceptionally low level in circumstances. And this is as a basis of a positive form of an expression of an opinion. An example of the reasonable assurance here, we talk of the audit of financial statement, where an auditor in this case does not give an absolute level of assurance, but a reasonable assurance. And this is due to inherent limitations of any engagement process. Is a question that was there last sitting. The inherent limitations of an audit. The examiner may also ask it, why is it not possible to give an absolute level of assurance? And just say this, it is an assurance engagement risk. Assurance engagement, where the objective engagement, where the objective is reduction of assurance engagement risk, reduction of assurance engagement risk, This is to exceptionally low level in circumstances, or exceptionally low level in circumstances, low level in circumstances as a basis of a positive form of an expression of an opinion, basis of an expression, a positive form of an expression of an opinion. In simple terms, is the positive assurance. So an example is the audit of financial statement. The audit of financial statement where the auditor gives reasonable assurance, but not absolute, not absolute. Level of assurance. Inherent limitations of any engagement process. Is the inherent limitations. What are these inherent limitations? The inherent limitations include, now, this is any engagement process. Maybe an auditing, maybe generally all the audits. If you are doing the forensic audits, doing what we call the operational audit, the management audit, all of them, the inherent limitation. I've said it was there in April. Then I've seen 2025. Question 1A. Last sitting, let me confirm. And it was also in April 2024, 1A, if I'm not wrong. Yeah, in last sitting, question number 1. Highlights its inherent limitations of an audit of historical financial statement. It was also there in the sitting of August 2024, same August 2024, question 1A. In August 2024, question 1A, you are to give highlight 5 inherent limitations of an audit. So it's just one and the same thing. Number 1, in auditing, we do what we call the what? Audit summary. What do you mean in this case? In audit, we don't audit each and every element of financial statement. In most of the cases, we'll say that we use what we call the, or let me just write it this way. We use of what we call the selective testing. Let me call it that. So that here, I can just say in auditing, we do audit sampling. Where when I talk of audit sampling, is application of less than 100% of the population, but we base your conclusion on all the whole population. So what I mean is that in auditing, we don't audit each and every element of financial statement. Because ukifanya hivyo kama financial statement have been done in a year. So if you do that, and in most of the cases, audits are normally done as at the year, how will you be able to do so? You cannot be able to do so. And that is one of the reasons. It is done on a selective basis. We don't audit each and every item of financial statement. Number 2, there is what we call the possibility of collusion. Possibility of collusion. This is where the auditor may collide with the management and give you a misleading what? Misleading report. Number 3 is the inherent limitation. The inherent limitations of the internal control systems. Inherent limitations of internal control system. Now, this is generally on when the auditor is ascertaining and evaluating systems. When an auditor finds that the systems are weak, he does not place reliance on the systems. And that is now generally what we call the substantive testing. The auditor will do extended substantive testing, where you will now be testing the details of transaction from the origin. So in this case, if the internal control systems of that organization are very weak, means that there are some areas that the auditor in this case will be able to do, will not be able to identify. And as a result, his opinion will be based on what he's been able to do. Number 4 is that much of evidence available. Evidence available is more persuasive than conclusive. What we mean is that the auditor is talking about what is probable, but not with what is exact. What I mean is that he's talking about what in this case what it means, depending on the information yenye amepewa na management. What is probable? The exact could have been if the auditor was the one who did prepared that financial statement. So here he's talking about what is probable depending on the information that he has been given by the management, not exact. Exact I mean, kama wewe ushaona hii ilikuwa inafanywa hivi, you see in the or observing the procedure as it is being done. And that is why in this case the auditor cannot give an absolute level of assurance. What you will give is the reasonable assurance. The other one is number 5, the use of judgment. Judgment in gathering and evaluating evidence. Gathering and evaluating evidence. Now this is what we mean. Here an auditor is giving out a judgment, a provisional judgment. The judgment that you can give may not be the same judgment that I may give. And in our case, we don't know who is on the right way, who is correct on that given judgment. And as a result, it is not possible to give an absolute level of what? Assurance. And the last one is the characteristics. The characteristics of the subject matter. What I mean is what is being measured is generally what is being measured is involving a lot of transactions. Definitely the auditor will not be able to go through all the transactions. So the subject matter will also be a key. It involves a lot of transactions, then the auditor will not be able to give an absolute level of what? An absolute level of assurance. So that is what we mean when we talk about the reasonable assurance. Why it is not possible to give where I've said the auditor, in audit of financial statement, we don't give the absolute level of assurance. When I talk of absolute level of assurance, we are talking about what is exact, and that is definitely cannot work in auditing. We just give what is reasonable. Number 2 is the limited assurance again. Limited assurance agreement. The limited assurance agreement is number 2. Now, here, the objective is a reduction of assurance engagement risk to exceptionally low level in circumstances. But in this case, the risk must be greater than in reasonable assurance. But the main objective is to form a basis of a negative form of an expression of an opinion. Generally, we mean you are giving a negative assurance. So this is an assurance agreement. Where the objective reduction of assurance engagement risk. to exceptionally level, low level in circumstances, or level in circumstances, low level in circumstances, but the risk is higher than in reasonable assurance. This is as a basis of the basis of a negative on, yes, one of the equation of an opinion. That is it. Mainly we mean what we call a negative assurance. In November 2018, question 1A, you are to talk about, you explain the term negative assurance. So when we talk about negative assurance, simply, we are talking about the limited assurance. We are generally talking about the limited assurance. Now we can talk about the distinction between the reasonable assurance and limited assurance. The reasonable assurance engagements, we can talk of the distinction and the limited assurance engagements. The question that was there last sitting again, if I'm not wrong, it was, is it last sitting or December? Should be December. Is it December really? No, August 2024 1C. August 2024 1C. August 2024 1C, you are to distinguish between reasonable assurance and number 2 is the limited assurance. First, you can differentiate them as per definition. Yeah, the objective is a reduction of assurance engagement risk. Risk to exceptionally low level in circumstances. I can end it at that point. Here, the objective is the reduction of assurance engagement risk. This is to exceptionally low level in circumstances. Low level circumstances. But the risk rather than the risk the higher than in reasonable assurance. And reasonable. That is by definition. Number 2, assurance engagement risk here is lower. Engagement risk is lower. Here the assurance engagement risk engagement high. One is here. The set of procedures performed are extensive. Set of procedures performed extensive. Extensive procedures. When I talk of extensive procedures, you are going more deeper. Here, set of procedures performed are limited procedures. Set of procedures performed are limited what? Procedures. Sets of procedures performed are limited. When I talk of limited, they are limited to the objective of that given audit. There are those audits that are not done as a legal requirement. So you will perform them depending on what you are limited to. Like in forensic auditing, like in what we call what? And even talk about in the cases of the procedural audits, the value for money audits, all of those ones. We talk about them. The opinion is a positive form of an expression of an opinion, and an expression of an opinion, or of an expression of an opinion. Here, the opinion is negative form of an expression of an opinion. Negative form of an expression of an opinion. Negative form of an expression of an opinion. These are majorly the distinction between the reasonable and the limited assurance. Now we go to what we call the number 3. Number 3, what we call the attestation engagements. Attestation engagement. This is number 3. Attestation. Now, on attestation engagement is where an auditor is engaged to clear whether a given assertion is correct or not correct. When I talk about an assertion, we are talking about the claim. If the organization is telling you that this is the motor vehicle and it belongs to them, how can you be able to ascertain that this is their motor vehicle? Those are what we call the attestation engagement. It's an engagement where? Engagement. Yeah. A practitioner is engaged. Practitioner is engaged to declare whether a given assertion is correct or not. Correct or not correct. Or not correct. Is correct or not correct. When I talk of assertions, as I've said, we are talking about the claims. Most of the cases we do it in audit of financial statement. You can be engaged to look at what we call the valuation. You can be engaged to look at what we call the existence. You can be engaged to look at what we call the completeness. How do we ascertain that? Generally, this one is if you are yet to confirm on all these evaluation, the completeness, the existence, the rights and obligations, all that is what we call in the attestation engagement. Number 4, direct reporting. Direct reporting engagement. When we talk about the direct reporting engagement, is when a professional accountant is appointed to to give a special report on company affairs. When I talk of giving a special report, is simply probably the company wants to acquire another company. It may involve a professional accountant to give them a special report to review the risk involved in that given one. To evaluate the company and to give a feedback on how the company is for purposes of now helping the organization to make a decision on whether to acquire that company. So is where a professional accountant is engaged to give a special report, a special report on company affairs. Give a special report on company affairs. That is what we mean when we talk about the direct reporting engagement. It's just one of the questions they ask you define, then should be in the sitting of November 2015, question number 4B. 4B5, you are to explain the word direct reporting and also the attestation engagement. November 2015, question 4B. November 2015. Now, assurance engagement risk. Engagement. Assurance engagement risk. Now, what do we mean when we talk about the assurance engagement risk? Now, assurance engagement risk is where a practitioner is engaged. Is where or is a chance where a practitioner may issue inappropriate opinion when the subject matter information is materially misstated. Generally, it's just like audit risk, where now is a chance where an auditor may issue inappropriate opinion when financial statements are materially misstated. So, it's a chance where a practitioner may issue inappropriate opinion, inappropriate opinion, when the subject matter is materially misstated. Materially misstated. Subject matter is materially misstated. That is what we mean when we talk about that. So we can talk about the components of assurance engagement. risk. Components of assurance engagement risk. Now, on the component, there are those that the auditor is having direct control. There are those that the auditor does not have direct control. So those that the auditor does not have a direct control, number one, we call it the inherent risk. In fact, this was on August 2024. Generally, the components of audit risk. Let me just check on the question. Yeah, it was in the sitting of when? December 2024, question number 4A, 2024, question 4A. They were talking about the audit risk, which is just the same as I've said. Audit risk is also the assurance engagement risk. So this number one is the inherent risk. When you talk of inherent risk is the susceptibility of the likelihood or likelihood of balances to material misstatement or when aggregated together to material misstatement, assuming there are no related controls, assuming there are no related controls. Now, what you mean is that it will just happen. It is as a result of the general environment. The auditor cannot control it. It will just happen because it has to happen, but inherent risk. Number two is what we call the control risk. Now, here we talk of a chance that the entity's internal control system, may fail to detect material mistake. Material mistake. May fail to detect material mistake. Entity's internal control system may fail to detect material misstatement. That is what we call in the inherent, the control risk. The control risk. That is number two. Is as a result of internal control systems. Internal control systems, we are talking about what is put in place by an organization to ensure that nothing goes wrong. So if the internal control system may fail to detect material misstatement, that is a control risk. Number three is what we call the detection risk. Now, this is where the practitioner's procedures, meaning that now here the auditor has control, where the practitioner's procedures may fail to detect material misstatement times. That practitioner's procedures may fail check material mistake. For the auditor's procedures, may fail to detect material misstatements. That is what we call in the detection risk. The detection risk. So those are the components of assurance engagement risk, and that is on the part of assurance what? Assurance engagement. So we talk of, I'll just introduce on non-assurance engagement, then we'll just come and talk of them in details. So non-assurance engagement, the non-assurance engagement, non-assurance engagement. You see, this is an assurance engagement. It's an assurance engagement that does not comprise of the 5 elements, does not comprise of the 5 elements of assurance engagement. Of assurance. Generally, we talk of them as special audit related services. They include one is what we call the agreed upon procedure engagement. Agreed upon procedure engagement. Number 2 is the combination engagement. Combination engagement. Number 3, yeah, what we call the review engagement. Number 4, what we call the due diligence. Due diligence. Due engagement. Due diligence review engagement, and the last one, what we call the review of prospective financial information. Review of prospective financial information. The review of prospective financial information. Now we can just highlight on this on agreed upon procedure engagement. Agreed upon what we call the agreed upon procedures. Now, on agreed upon procedure engagement, there is where the practitioner is being engaged to carry out procedures of audit nature, to which he has agreed upon with the engaging party, and it's to give a level of assurance to the intended user, or to report on what we call the factual finding. An example in these cases, in the cases where we are doing the fraud investigations, is what we have agreed upon. So this is where a practitioner is engaged, carry out procedures of audit nature, procedures of audit nature, to which he has agreed on with the engaging party, to report on factual findings. Report on factual findings. Report on factual findings. That is what we call in the agreed upon procedure. On what you have agreed upon with the engaging party. What you have agreed upon with the engaging party is what we call in the agreed upon procedure engagement. The agreed upon procedure engagement. So as I said, it may be suitable. For example, it's investigating that generally, as I've said, is where you are doing the forensic work. Forensic auditing. You can apply the agreed upon procedure engagement in verifying insurance claims, where you want to determine the amount of compensation to be compensated by you by insurance company. And number three is reporting the non-financial data. Non-financial data. Reporting for non-financial data. That is an agreed upon procedure engagement. Number two is what we call the compilation engagement. Now, compilation engagement is whereby you are engaged to assist the management in preparing and presenting financial information by compiling the information under the terms of what? Engagement. Generally, we are assisting the organization in what we call the other non-audit services. Like they are helping you in compiling financial statement. They are helping you in filing returns, etc. So it's an engagement. A practitioner is engaged to assist the management in preparation and the presentation of information that conform to suitable criteria. Conform to the suitable criteria. Like for example, you may help the organization on accounting services. May help organization on taxation services. Valuation services. etc. Mainly, you are helping on what we call the non-audit related services. Our number three is on review engagements. Now, review engagement, we are talking about the review of financial information other than the one that is done by an independent auditor. Objective is to enable the practitioner to state on whether, based on the limited procedures The financial statements are in consistent with the identified financial reporting framework. So this is it's a review of financial information enable practitioner enable now based on the limited procedures based on the limited procedures the financial information conform to the identified financial reporting framework. Conform to the identified financial reporting framework. Now, you may be asked, I think it was around May 2018, where you are to differentiate between the review engagement and the audit of financial review engagement and audit of financial statements. The distinction between the two. Just have this, the review engagement. This one is the statutory audit. Now you want to differentiate between the two. The difference between the review engagement and statutory audits. Now, when we talk about this difference is here, this is a limited assurance engagement. It is limited assurance engagement. This is a reasonable assurance engagement. The reasonable assurance engagement. This other one here, it is what we call the engagement risk is higher. Engagement risk higher. Engagement risk here is lower. Risk lower. This is voluntary. It is voluntary. Voluntary. This one, it is a legal requirement. Now here they may set of procedures here. Limited procedures. Here the set of procedures are what? Set of procedures. Extensive procedures. Extensive procedures. Set of procedures there, they are extensive procedures. Here there is a positive form of expression of negative form. An expression of an opinion. Here we have a positive form of an expression of an opinion. Expression, this is of an opinion. an opinion. That is it. That is on the review engagement. The last two, let me just highlight them. Then it's just what is remaining. We just finalize. There is what we call the due diligence. Now, on due diligence engagement, you are generally engaged. You are generally engaged to systematically perform procedures and assess information to identify and reduce risk associated to a given transaction. Mainly, this happens on what we call them when you want to acquire a company. The practitioner will systematically evaluate perform procedures to obtain and assess information that will help you reduce the risk associated to that given transaction. So this is an engagement, or this involves a practitioner being engaged to systematically perform procedures, yes, to obtain and assess information in order to reduce risk associated to a given transaction. Associated to a given transaction. That is a due diligence review. Now, the other one is the prospective financial information. Financial information. That's one now. Prospective financial information. Now, this is information that involves engagement to now on prospective financial information, you are engaged to review as subject matter or information or future information and the actions that may be or should be done as at the time of that future information. Generally, just on an event that will occur in future and actions that will be taken towards to as a time of that given event. Involve an engagement to evaluate future events and actions to be taken as at the date of event. To be taken at the date of event. Hizi ni kama watu wa hao wenye utuambia there are some of the things that will happen in 5 years to come. So you may be engaged to refuse such things. Ama let's say watu wa mvua, they will tell you that probably at this time there is something that is going to happen during those things. So you may be engaged to review such cases. You know, tunaita the prospective financial information. That marks the end of the first topic, which is assurance and non-assurance engagement. The question on types of non-assurance engagement was in November 2018, question 1A. November 2018, 1A. In November 2018, question 1A, you are to, is it not question 1A, but I've said November 2018. Should be 2017. November 2017, 1A. Auditors carry out various audit assignments in relation to above explained for non-assurance engagement that auditors should undertake. The non-assurance engagements are the one that we've been able to talk about. So maybe meet tomorrow, we get to the nature, purpose, and classification of audits. Enjoy your day.
Thank you, Malim. Malim, I have a question.
Yes?
Is it possible to begin at 6?
6, huh?
Yeah, because I think you can cover more. I like the pace.
Mm.
I think you can cover more if you start early, just depending on your availability.
Let me try. We try probably by 6:15 then.
So, all
All right.
thank you.
Very good.